Okay, folks, welcome to the Easter edition of Sunday Night Futures Live. We're going to talk about the futures action. Of course, the economic data coming out next week, earnings, huge earnings week coming up. And we'll talk about some headlines that are going on that could impact the market short term and longer term. So before we begin, happy Easter, happy Passover. Thank you for spending a few minutes of time with me this evening. And we're going to have a great night. We're going to go over some chart requests later on in the program, but I'm watching the S&P futures take it on the chin here a bit. So I guess we'll start off as we normally do with going over the futures. If I can ask you to smash the like button, subscribe to the channel. That's it. Not asking much. So if you can do those things, I'd appreciate it. And let's get to it. Before I do it, let's the thing settle down. I'll go to comments. Tom, Bill Ackman owns NFLX. Not sure if earnings are good. It seems PT Bill's company is bottomed out. I know he had a good short not too long ago. You could be right for all I know. Larry, regarding stocks, the Yogi Bears. Here we go. Here we go. I didn't even read the whole thing yet. I know I'm gonna get one. The future ain't what. I love Yogi Berra quotes. They're the best. Trader Isaac, happy Easter, my friend. Happy Easter. Tom Lou again. Happy Easter, sir. Franklin. Bob, did you see my email on the videos for the team? The link did not work. Oh, for which one? Yesterday's, the Saturday one? If so, I'll get it back out. Thank you for that. I did not see the email yet. I've been out all day. Happy holidays, Bob. And everyone. Lewis, welcome aboard, pal. Happy Easter, Franklin. And we have the Saturday one. Okay, I'll send. You know what? I'll post it on the Slack forum. Okay, to make it easier for everyone. Hey, Kat. I saw your message earlier on YouTube. I saw you posted. I didn't read it yet. Did you short Pfizer? I think about you every time I see that symbol. Okay, let's get to it. The futures are weak. I mean, the S&Ps are getting hit. We're down 0.21%. Sherry, hello. Jeff, Bob, seems like there's more doomsday rhetoric than usual this past week. I mean, the government's given us a lot, Jeff. I mean, they give us a lot every day. It's a new fear porn. So that probably has something to do with it. I mean, you take a look at what they're doing with Twitter right now and Elon Musk. He was a hero 2 weeks ago. Now he's a demon. I mean, it's bananas. So we're going to talk about that bit in a little while. All right. So to the futures, E-minis still down 0.21%. They did move higher initially, but were rejected. Let's take our crayon out here. We are flirting with a new weekly lower low. We are probably going to take this out tonight as we're live. All right, so we'll track that. Back to the 30-minute chart. You can see how they're defending that support level. They don't want to have a new weekly lower low. It's earnings week. It's silly season. S&P mid caps, they're down as well. Not as much. 0.08%. Where's my NASDAQs? NASDAQ, oof. NASDAQ's down over a half percentage point. We have a new weekly lower low here already. We have support right down here at 13,767 on the NASDAQ 100 E-minis. Okay. What else do we have? The Russell 2000. So it's clear right now, as we begin the evening, that we have the mega cap names. They are performing worse than your mid and your smaller cap names. Not a ton of volume here. Let's check in with the US dollar. Then we'll segue over and into commodities. Wow, look at the tight trading range the dollar's in. Look at the Bollinger Bands, how tight that is. So whenever you see the Bollinger Bands this tight, you have to give odds for a breakout or a breakdown to the macro trend. So we're obviously in an uptrend on the US dollar. The probability of a continuation breakout out of these tight Bollingers is very, very high. So I would expect to see new higher highs on the US dollar. Yeah, we got overbought here on Thursday, and we've been consolidating. Remember, the futures market, at least the currency markets, foreign markets, were open on Friday, and the dollar was trading, but very, very tight, very light volume. Let's face it. And looks like we're getting ready for another move up higher here. Now, with the dollar unknown, we need to take a look at the commodity names to see what they're doing. I like to begin with gold to get a feel for that because we're so heavily levered towards it. Gold is up. We were higher. We faded a little bit. Looks like we're going to go higher here on gold. So what I want to do is I want to take my crayon out. We're going to be conservative with our breakout point. I want to know if we break out above this resistance level here. We are very bullish on gold, very bullish on silver. Both are looking very good. And keep in mind, folks, that gold, silver, and the respective mining names have been performing very, very well, despite the fact that the US dollar has been very, very strong. Normally, that is not the case. So the dollar has been strong. Could you imagine if the dollar were weak? What would be happening here? So, is this a macro fear trade that is still playing out? Maybe. That appeared to have faded away about 2 weeks ago, but it appears as though it could still be lingering, or we've entered into a period of time where, if you take a look at the chart of oil going back, more than 10 years ago, you would see that there's an inverse correlation between the dollar and oil. That stopped. And oil, ever since, because the supply has been moving up higher despite the US dollar being stronger. Are we moving into a scenario where, despite the dollar still being strong, it's interpreted as being temporary, and that gold is picking up the slack because the Federal Reserve is not serious about inflation? And I'm going to go to a chart in a moment to illustrate how unserious the Federal Reserve is about fighting inflation, despite their rhetoric. Don't listen to what they say, watch what they do. And that's what we're going to do tonight. So, gold up, quiet for the most part. Let's take a peek at silver. Silver up a half percentage point. Looking good, loving silver. Where do we want to go next? Energy. Let's do energy. Now, oh my God, natural gas ripping up higher again. Look at this. Natural gas up over 1.5% again. Wow. I think that with natural gas, we're moving into the early stages of a macro bull market here, and it's still very early. The problem is with natural gas, if you take a look at it on a daily time frame, this is unsustainable, right? This parabolic move. And if you take a look at RSI, RSI is at 86. Let's face it, it's a commodity. It can go up to RSI 90, but this is not where you want to buy it. So I'll be honest with you. I'll be looking to probably put on a short trade here in the next couple of days. Not that I'm betting for a collapse on natural gas, just the froth coming off a bit. And that's a short-term swing trade. But it'll be a very small trade because if you get it wrong, natural gas can rip your face off. Any commodity can rip your face off if you're short. Taking a quick peek at, where's my light sweet crude? Light sweet crude, anytime now. Here we go. Light sweet crude moving up over 3/4 of a percentage point. So energy and fuego already this week. We have a breakout. This is a daily chart. We have a breakout. Oil going up higher. Let's drill down. Let's go to a 30-minute chart. Very nice. We broke out above resistance, pulled back, retested. Now we're going to get a continuation move up to the upside on oil. Looking very, very strong here. Let's move on to agriculture. And the reason why, for new folks out there that are new to the stock market, you may be saying, why does this guy talk about commodities? Why is he talking about bonds? I haven't talked about bonds yet, but why is he talking about this stuff? All I want is the next hot stock. We don't do that here. That's stinking thinking. We don't do that here. What we do here is we take a look at the macro picture and we interpret how the markets are going to react to rising energy prices, what sectors benefit. And we trade those sectors to the bull side and we short other sectors which are inversely correlated to the downside. So that's why we're doing what we're doing right now. We want to be smart. We want to work less and be smart with our entry points and what we're trading. So in this environment, I'm going to save this environment. I have a chart to go over in a moment. Let's go to agriculture, soybeans. Soybeans are down. I like to go to a weekly chart here because I don't track the, oh, look at this. I don't track agriculture on a daily time frame. So that's why on a Sunday, I like to defer to the weekly chart so I can get a feel for how we closed out the week. And this is a really, really strong chart. Very strong chart. Looks like we're breaking out higher here. We got extended back here, consolidated. The fact that we didn't sell off just tells you there are bids below. People are stepping up. They're buying soybeans. So this is not a short. This is going to break out higher. So we're down on the session so far. Not a big deal. Wheat is up off session highs. Weekly chart. Wheat flirting with a breakout. I mean, monster chart. It looks as though we are going to execute and break out to the upside. You know, as these names begin to break out, you know, there are two charts you need to watch. XLY, that is your consumer discretionary names. Here, and you can see they're lagging relative to the XLP, which is your staple names, which have broken out of late and appear to want to go higher. So as you see the price of agriculture break out to new higher highs, staples are going to perform. Discretionary is not. Why? It's because people have less discretionary dollars. You're not seeing wages keep up with inflation. Therefore, the more money that goes into the supermarket, that's great for Kroger. You want to buy Kroger. Kroger's going to do great. What you don't want to own are your discretionary names. Starbucks, honestly, Starbucks was packed the other day. That's probably not a good example of a discretionary name, but look at your discretionary names. Check out their charts. They're probably not doing all that well. So wheat looking good here. Short-term time frame, lethargic. Corn looking really good here. It's getting ready to break out. Let's go to the weekly chart. Wow. Beautiful macro breakout here. If you want to buy corn, you don't want to trade futures, type in the symbol CORN. That's the Tetrium Corn ETF. Very bullish here. Corn going up higher. Oats getting beat up. Bearish Q reversal bar on the week, last week, but a nice run. Looks like they're going to take a pause. Let's take a quick look at protein. Do we have hog? Yeah, we have hogs. Look at this. Look at this macro breakout here. Wow. So pork prices are going to move up higher. Very strong chart here. We are breaking out above resistance. I don't want feeder cattle. I want live cattle. Live cattle weekly time frame. We've pulled back off the highs. 30-minute chart. We're consolidating. This is probably moving up higher. So we know now going into the new trading week that we have commodity prices continuing to move up higher. Inflation is here. It's not going anywhere for the time being. We have a Federal Reserve that is not fighting inflation despite their measly quarter-point rate hike. It's a joke. And I'm going to go to a chart in a moment showing you what a joke it truly is. What else? So what we want to do here now is I waited for the end to take a look at the 10-year yield. and the 10-year yield is shooting up yet again. We already have a new weekly higher high on the 10-year yield. So we know enough right now as we begin this new trading week what we want to buy, what we don't want to buy. I did a video yesterday on my top picks for the coming week. Dow Chemical, British Petroleum, and TAP. That's Molson Coors. Those are staple and energy-related names. Chemical stocks looking very strong right now. Early stages of a continuation move up higher. Dow is a best-of-breed play. Great yield. So if you're looking for an investment in chemicals, I would go with Dow. Molson Coors looking very strong. There's a video on YouTube and on the website. If you're watching either place, go check it out. I did the analysis yesterday. So what else do we have? Let's check out Bitcoin. Oh, what else? What do we want to avoid? We want to avoid growth. We don't want growth. In particular, semiconductors, technology. If you're thinking about buying ARK Fund on sale, it's not on sale. It's very, very expensive. Avoid it like the plague. Right now, we are not in a good spot when it comes down to where you should be buying growth stocks. This is a very defensive market. Bitcoin moving up nicely. Good. Good. So we have, this is interesting because we have Bitcoin, which has been trading with growth stocks to the downside. Oddly enough, tonight, what we have is the NASDAQ down, what was around 0.75 percentage point? It's down, or actually 0.5 percentage point. And we now have Bitcoin that's up over a percentage point. So my thesis has been, and when I was on the TrendSpider webinar about early February, I did that. They asked me my opinion on Bitcoin. I said, short-term bearish, longer-term bullish. And so I pointed out using the correlation charts that Bitcoin is correlated with CPI, the Consumer Price Index, but it's also correlated with the NASDAQ, meaning short-term Bitcoin, I believed, would go down with growth stocks, and it has. The however is that when the US dollar begins to weaken, which it's not doing yet, but when the dollar begins to weaken, and if you see continuation breakdown on the banks, you're going to see money move over and into Bitcoin. Why? Because I'll be doing a video on this in the next week or so. You got to start paying attention to bank bail-ins. The Dodd-Frank bill after the Great Financial Crisis, these two thugs helped create the Great Financial Crisis. Who were charged with writing the bill to fix the next financial crisis? The thugs who began the last one. So bank bail-ins will be affecting people. If you have a bank account in excess of the FDIC max of $100,000 in Wells Fargo, too big to fail banks, JP Morgan, Citibank, they can take your deposits and help bail out the bank so that the government doesn't go to the public and take taxpayer money. So be careful who you're banking with. You're better off with your credit union, and I'll bet you that the fear of a bail-in, your money being stolen to bail out a bank who was gambling with it and had no accountability whatsoever. Nobody went to jail for the Great Financial Crisis. Nobody. Yet we paid for it. So people are going to look to take their money out of the U.S. banking system. And the way we lost our global dominance was how we exposed ourselves to how we're going to treat other countries with the Ukrainian invasion by Russia. And the Canadians did that as well with the truckers by seizing their bank accounts. Watch, there's going to be a great rotation into crypto. So that's my long-winded diatribe. Let's go back to comments. Oh, Christ. I'm not showing the charts. God damn it. I'm sorry, folks. This would help. I'm so sorry. Ugh. All right, I'm not gonna go through it all again. I'm really sorry. Um, I'm just seeing your notes now, guys. I'm sorry I wasn't sharing my screen. I apologize. Why is silver and gold price not ticking yet? No, they're ticking. Gold was up, silver was up. Yeah, silver's up. They're open. Gold up as well. Now up $3.10. Wheat is strong as long as the yeah, there's no doubt. Yeah, yeah, I agree with that. Sorry, Gay. Sorry, man. I wish I would have looked at your comments earlier. My apologies. Gold and silver are in Colmex spoofing pool. Very true. Until NEM hits $100, Joe Sixpack will react. Yeah, you should be buy the physical. Don't buy the electronic or the Colmex gold or silver. All right. Um, that's the futures. Okay. So going into the new trading week, where are we at in this cycle so far? We are here. I believe that obviously the full recovery is over. The economy is rolling over. I think the economy has further declined more so than the stock market is highlighted in blue. Economy in green, stock market blue. The stock market has really yet to break hard. It hasn't done so. Where this chart reflects that the economy is rolling over a bit more smoother. I think the economy is rolling over a lot harder than a lot of people expect, as noted by what else? You know what I'm going to say here? The yield curve. The yield curve. We inverted here. We have now begun to steepen on the yield curve. For those not familiar, the yield curve has identified or front run each recession since 1955. So it's no joke. We have inverted on the yield curve. We are now beginning to steepen. So coming back here, we are far away from a full recovery. We are into, I believe, probably early stages of recession, and the market is probably going to break a lot sooner than what many may think. So buckle up. Why do I believe that? Well, folks, the markets, we have a lot of, I forgot who said it earlier, that we have a lot of bad news that's out there. Yet the stock market is really not yet priced it in. Yeah, we've had a correction, but we've rallied back. So the stock market remains overvalued. We remain 50% higher or 1.6 standard deviations beyond historical trend. So we have a lot further to correct here before we're ready to go into the next economic cycle. And normally, when you correct off of the highs, not only do you retrace back down to prior trend, you normally break it, overshoot to the downside. That's when the Buffetts, the value investors get involved and they start buying up stocks. And when they start buying, it gets reported on the news, and then it becomes a self-fulfilling prophecy that you begin to see the markets hook back up again. We're nowhere near that yet. And when you take a look at the Schiller PE ratio, the market became less expensive last week, but still very, very expensive relative to the mean. We closed out the week last week at 34.58. The mean is 16.94. So we remain very expensive. Economic data coming out this week. The home building index, we know the home builders are rolling over. Bullard comes out. Can't wait to hear what he has to say. Evans comes out. Neil Kashkari, this guy's off of his rocker. There's something wrong with this guy. So I'm not looking forward to what he has to say. Building permits, Building permits are a forward-looking indicator for housing. Just because you get a building permit does not mean that you need to break ground. So generally a good thing when you have building permits increase. But I know for a fact, I did a lot of traveling lately. I know for a fact from the home builders' mouths, they are putting a moratorium, as they wanted to call. I said moratorium. They freaked out. They called it a pause on new builds for certain developments. So beware here. Don't get lured into a false sense of security that building permits beat. You want to take a look at starts. A lot of Fed heads coming out this week. Oh, we get the Fed's beige. That's why. Fed's beige book comes out. That's why you have all these Fed heads front running the beige book. Jobs. Every Thursday we get that. Leading economic indicators. Bullet out again. Jesus Christ. Twice in a week. Jay Powell comes out. Oh, he's going to be talking to the IMF. More communists. Friday. The manufacturing PMI. Any number above 50 is a sign of expansion. A number below that is a sign of contraction. So we get both the manufacturing and services number, but they're really going to be overshadowed by earnings. We're going to go to earnings in a moment and talking about what we're going to be trading. But I mentioned earlier that the Federal Reserve is not serious about fighting inflation. And why do I say that? Well, you may be saying to yourself, let's face it, they raised by a quarter percentage point not too long ago. They kept their promise to us. They're serious. They're going to fight inflation. They got this. Wrong. Because the same week that they raised the interest rate by a quarter percentage point, which is a joke, they also increased their balance sheet. They were buying debt here. And then as they paused, they bought more again last week, expanding their balance sheet even further. What are they doing? They continue to underwrite the Treasury. They continue quantitative easing. They're financing the debt, folks. They're financing the debt. So take a credit card to pay off another credit card and keep buying more junk. That's what they're doing. So what they're doing is stoking inflation here. Any benefit to a quarter percent rate hike, wiped out by what they're doing right now with the Fed's balance sheet. They need to cut the size of government. Until they do that, we go nowhere. Now, when it comes down to some good news is that we have margin debt. I was surprised to see this. And when I saw it, I said, okay, I got to share this. We have seen margin debt come down quite a bit. What I feel bad about is that a lot of these people, the reason why margin debt came down so much is because they got forced out of their positions. And a lot of these people, while they probably took losses on the way down, they made a lot of money on the way up. What just passed by? Tax day. So the gains that they made up on the way up and may have lost on the way down, they still had to pay taxes. They've blown out on credit, but they have to go into their pocket to pay taxes on their gains. So this happened to me. This happened to me in tax year 2020. I had a great 2020 until March. Then it all blew up. And then April came and I got my tax bill. So these people are going to get burned. I've been here. I know how it feels. So the good thing is that a lot of the speculation that was fueled by cheap money is now coming out of the market. That's a good thing. IMF for commies. They are commies. Can Twitter board enact a poison pill without your? They're going to try. There's going to be a big lawsuit over there. They're going to try. Yeah. They can issue more shares. They don't need the board's approval. I mean, they don't need shareholder approval to dilute the shares. So yeah, they can. And we're going to talk about that more in a moment. And it just goes to show you, I don't want to blow what we're going to talk about, but capitalism's dead. In certain companies, capitalism is dead. There's no shareholder activism. I mean, Elon Musk is being a shareholder activist, but the board is, again, more communist. They're everywhere. Threats to the market, U.S. long bond. Folks, this is a trend that began, a downtrend, which is a good thing, that began in 1981. There have been multiple times in the past where we've broken back out. You can see that they have an envelope here, a sensitivity gauge, where you can move above trend and you're still within the band of um, acceptable gains and losses. But if we begin to move out above 3.46, 3.93, if you begin to see higher highs on the 30-year bond, there's not much the Federal Reserve can do to control longer duration yields. Short duration notes, yes, they can manage the hell out of them. Longer duration 30-year debt, very difficult to handle. So this is going to become a major problem for the U.S. economy if, in fact, we break out above 3.46. And with the long bond moving up higher, borrowing costs are becoming more expensive for home builders, borrowers. And what are you seeing now? After a long downtrend in single home residential delinquencies, you're beginning to see a higher low. 1-year chart. We're ticking up here ever so slightly, but we want to pay attention to the trend. The trend, 10-year view, has clearly been down, but now we are bottoming out. And for anybody that's followed me for any length of time, you'll know I watch macro charts, quarterly charts, monthly charts, hell, yearly charts, and I'm looking for the higher low. How do we know that natural gas was going to rally months ago? We looked at the chart. We saw a higher low get put in. We began to break out to new higher highs. And I said, natural gas is going to break out higher here. And now it is moved up dramatically. Now it's overbought. So we're watching this very, very carefully, the delinquency rates, because you have in many markets around the country, especially in the South, prices are through the roof. Okay, so earnings trades. Last week we did BlackRock, we did Goldman Sachs, both profitable. One was 100% profit, that was BlackRock. The other was Goldman Sachs, 55% profit. We did very well. What we plan on doing this week is trading Netflix. Netflix was a challenge for us last quarter. We took a loss in that trade last quarter. IBM, maybe. I don't know about IBM. Premiums aren't that big. Maybe. Tesla. I'm worried about Tesla. That's probably going to be a directional bet. I'm only going to sell calls on Tesla. We don't buy calls or puts into earnings. That's not the play. You want to sell premium because those options are very expensive. You want to sell them. So Tesla, for reasons I'm going to discuss in a moment, is now under the microscope of the federal government where you never, ever want to be. So I'm worried about investigations going into Tesla. The SEC and the DOJ now have a joint investigation into Tesla. So I'm probably going to play this one very conservatively and just sell deep out of the money calls on it. Another trade that we're looking to put on this week is going to be Dow Chemical. We'll trade the options, but as I mentioned earlier, I like the common stock as well. So we may be buying the common this week. What else are we going to trade this week? Schlumberger is a possibility. Amex, another one. So it's going to be a busy week for earnings trades. And next week is going to be even be a more busy week. So the following week, we have Microsoft, Alphabet, UPS, which we traded last quarter. What else are we going to trade here? Facebook, Meta, PayPal, Spotify, Qualcomm, great one to trade. Apple, Amazon, awesome. XOM, Honeywell, a couple of oil plays. So we're going to be busy. We're going to be very, very busy these next several weeks. This is like Christmas season to us, but this time it's in Q2. So we love this time of year. So members, get ready. We're going to be very, very busy. Okay, so I'm reading articles 'cause I'm trying to figure out what the hell is going on over in China. Why are they doing what they're doing? It's so Orwellian. I mean, the PR, they're so worried about their public face over there. You got to wonder what the hell is going on over in China. And this article here brought up a couple of different scenarios about why they're pulling what they're pulling, locking people down, killing pets. People are starving in Shanghai. I mean, this is a 21st century city and people are locked. They're now locking people in their homes again, like it did at the beginning of the crisis. Now, what this is doing to the supply chain, and I warned about this when COVID first broke out. I said you need to start looking at India. You need to start looking at Vietnam, which I never bought. We bought Indonesia, but I never bought them, and those ripped up higher. The supply chain must shift out of China. It has to. It has to, because uh, I don't believe this one. This is the three scenarios of why they're doing what they're doing. CCP is looking to try to usurp more power. They already have enough power. I don't buy that. There is something about COVID that China knows the rest of the world doesn't know. I don't buy that either. This is the one that I'm buying. China is looking for an excuse to slow its production to put pressure on the Western world at a time when it is trying to separate further economically from the West. The Chinese Communist Party saw what we did to Russia. And I warned at that time, I said, this is going to have consequences. Cutting the Russians off of SWIFT, the payment system, the US dollar payment system, was going to have massive, massive uh, reverberations. And sure enough, this is going on over in China. They are decoupling. They are creating their own economic system. Russia, India, and China, probably Indonesia. A lot more of the East is going to follow as we begin to throttle back on our economy here. And nobody can look at the government here in the United States and say, you know what, this is a stable place to invest. It's not. We just seized the forex uh, of a G7 country. We just seize their assets. We continue to seize their assets. So this is not going to end well for us. This is from Kyle Bass. He's very ruthless on China, and rightly so. But I will say that he does talk his book quite a bit as well. But he's not wrong here. China's digital yuan, the biggest threat to the West, is overshadowed by Russian war, Kyle warns. So the Chinese are making massive inways as the war rages on with the digital yuan. They're trying to bring the digital dollar here. Why? They want control of you. They want you to have a bank account with the Federal Reserve. You say something wrong on Twitter, oh boy, your bank account is locked. They need more liquidity in the markets. They don't have to now cut interest rates anymore. They'll put an expiration date on your money. It evaporates. So the serial numbers that you see on your dollar bills, your crisp $1 bills right now, they are going to be on a token, and they're going to track everything you spend, everything you do. What Kyle is saying here is that they are going to usurp. They are going to, meaning the Chinese Communist Party, if we allow them to use their digital yuan in the United States. They had an example here of, if you're a married guy, you have an account on, what's that thing? Tinder, dating app. I think it's Tinder. And you're married and you have a sensitive job. Well, they'll find out about it. They'll figure it out and they will blackmail you. That's the power that they're looking to unleash on top of us. So beware of China, beware of the World Economic Forum. They despise us. They despise our existence. So buckle up. Elon Musk. All right, so this is a February 2022 report out of Goldman Sachs on the 12-month price target of Twitter. So when they released this, the shares are trading at $37.83. Goldman comes out with a report that it's worth $30 a share over the next 12 months. 20% downside. So you have Elon Musk that comes along, offers $54.20 per share. For those of you that are into marijuana, I didn't even realize this. I'm not a big weed guy, but 420 is a date, I guess, when weed became legal in certain areas, maybe Colorado. I don't know. But apparently it's popular, and a huge premium over the value that Goldman Sachs applied to it. The board rejected it. What are they going to do? We're going to do a poison pill. So the board owns less than 1% of the company in the aggregate. They own none of the company, yet they're making all of the decisions for the shareholders. This is why I said earlier that capitalism in certain companies is dead. They have zero alignment of interest with the shareholders. The threat that Elon Musk poses is that you have Elon Musk threatening to take out a massive attack vector on the public. Twitter is a massive propaganda tool to help, to basically help simps think the right way. If you're smart, you're intelligent, doesn't mean you had to go to college. You just have to be an independent thinker. You're not bothered by it. You can see right through it. It's ridiculous how they try to manipulate you. But if you're a simp and you want to be led by government, they have your digits, man. They know exactly how to manipulate you. One day you're angry with Donald Trump. The next day you are pissed off about January 6th. The next day, now you're ticked off at the Russians for invading Ukraine. You have your Ukrainian flags up. It's fear porn, constant fear porn. COVID, perfect example. And they continue to silence people. And when you hear people on CNBC, I don't even call them people, they're lizard people. When you come on MSNBC and CNBC and CNN and they say, listen, the only way to protect democracy is through more content moderation or censorship on these platforms. These people are communists. They're communists. So this is a threat to the communist regime, and they are going to go down fighting on this one. This is a hill that they are willing to die on. But Elon Musk, God bless his soul, Twitter's board's interests not aligned with shareholders. Elon Musk says, we know that. Proxy fight, folks. He's going to call the individual investors. Hey, I want to buy your shares, or vote your shares with me. There's going to be a proxy fight here. So, and if this doesn't work out, you had better bet that Twitter is going to take a nosedive. You are going to see Twitter by spring, or let's say by summer. It's spring now. Twitter's probably going to be trading down with a 20 handle if this doesn't work out. Nobody's going to have any respect for these shares. Watch out, Twitter. This is going to be an interesting week. All right. Do I cover everything? Did anything pop up new? None of my alerts are fired off either. So that tells me that equities have firmed up here a little bit. No new news. Let's go back to equities quickly. Gold moving up higher now at session highs. Russell 2000. Oh, we're melting down here. Why did my alerts fire off? Maybe I didn't put one on for the Russell. NASDAQ 100. All right, so my alerts down here. We are still weak here. S&Ps. S&Ps have weakened up near session lows. I want to point this out. Well, this is a 15-minute chart. Let's pull back to an hourly chart. Okay, gold just broke out. Wow, gold ripping now. Nice breakout here. We're gonna break out and expect a pullback and a retest of 1982 on gold. Very nice. So our inflation portfolio is begin the new trading week is doing very, very well, very, very strong. Let's go do some chart requests. All right, so I have only one. Jeff, Uroy. Okay, let's do Uroy. Oh, uranium. Love uranium off the bat. Love it. We own it. We own URA. We want to buy more. Uranium broke out last week. UROY weekly chart consolidating very nicely. Automated trend lines are telling us a story that we really, really love. We'll take them off, put them back on. Bam. Lower band of support is getting respected. We have our upper band here at resistance. We want to know when we break through. Folks, if you're not using TrendSpider, 35% discount code below. Take advantage of it. 7-day free trial offer. Automated technical analysis. Our alert is set. We're good to go. Let's check out the seasonality on Uroy. This may be new. Yeah, it's new. Let's go to URA. This is the uranium ETF. We can go back further here, back to 2010. That's good enough. March is over. April, not a great month. These next couple of months aren't wonderful. But with the Ukraine issue going on and the threat of Russian embargo of uranium exports, that should keep a bid under uranium. Back to Uroy. We went over the weekly chart. Let's go to the daily chart. Very similar to the weekly chart. We have a lot of resistance above, but I think that we are breaking out here very, very soon. Here's the monthly chart to get that macro view of where we've been, to identify where we may be going. And clearly, the trend is up. And we are, you could argue we broke out here. We broke out here, and now we're doing a retest. This is your next breakout point at around $4.82. I'm fine with nibbling here, adding more on a breakout, but uranium is going up higher, very bullish. HD, M. McNeil, HD, Bob, to the downside. You looking to short it, M. McNeil? I think you've hit your price target. Again, the power of the automated trend lines. So I drew this one apparently. That's a drawing. But it coincides with where the algorithm's picking up support below. So I think what we've done here, we've hit a support level, critical support level at around $300 a share. So I suspect, let's go down to a weekly chart. I suspect that we're probably going to vacillate and then get a bias to the upside, maybe a rally up to, I don't know, I think this is extreme, 367. But you have your This is your V. This 21 period moving average has got to get through first. 21 period moving average is at 338 per share. That would be primary price target number one. But you mentioned you wanted to know the downside. I think we're at that support level. If it fails to hold, we're coming down here. Right here. 264.50 on HD. But keep in mind, if you're looking to short this name, it's not a short. It's had a heck of a sell-off here. We found support. It has reacted at support favorably. So this is not where we want to go adding or opening a short position. So just be careful with that trade. Paul, signing on late. Hey, Paul, welcome aboard, man. All right. So you're looking to short. I wouldn't short it. Way too much risk. Way too much risk. Now, if it breaks down to new monthly lower lows, different story. Or if you wanted to play it this way, where here's our support level here. Let's give you a number. Support is at current, let's say $300 a share. If it breaks $300 a share, then it becomes interesting as a short, because if it closes down below that mark on a daily, especially on a weekly time frame, that's a bad deal. That's very, very bad. So if we get that breakdown, then I would consider shorting HD. But the overall market needs to be rolling over as well. So it's not my favorite short, given how much we've pulled back and that we're at support. But if we break 300 per share and we close there, then it becomes a short again. And I would ride it down to, well, you're going to have support here at 285. If that fails, down here, 264 per share. UNP. Union Pacific. This was a high flyer recently. It still is. It's looking good. This is a monthly chart. But a lot of the froth has come off here. We are just off the lows of the month. And what you want to pay attention to here is this lower band of support. Because remember, this lower band of support intersects with the breakout point from back here in October. If that fails and we begin to break down below support levels, that puts into question whether or not we're going to hold 233 per share. So be careful here. We're down on the month. We did not put in a new monthly high. So the way I'm interpreting UNP right now is that it's stalling out. It's not a short. I don't think it's a buy yet. Let's go to the weekly chart. Swing trade to the upside, maybe tight stop right below last week's lows. Last week's lows being 239.57, and I would be out. Daily chart. I'm not loving this. I think this is a bear flag setup. Right? Here's your bull trap. I think that this is probably going to fail. And what you really want to do is pull up the railroad index to get a feel for where the sector as a whole is, or how it's behaving. And it's not doing well. I mean, we saw, this is a daily chart, a massive sell-off here. This is classic bear flag price action. All right, so we got oversold on this massive sell-off. We had a short covering rally. This rally, as we now hit resistance at 3,500 on the railroad index, is now at resistance. You're going to see sellers move in. You saw them move in on Thursday, taking the shares off the high. We're probably going to resume the downtrend here on the railroads. So be very, very careful, and to double up on how we want to analyze the railroads, we want to take a look at the transports as well. And here are your Dow transports. They had an up week last week. They were stopped dead at resistance. We have a double top, a lower high, and now we're threatening to break down to new lower lows. I would avoid. It's not time for these stocks yet. Remember where we're at in the cycle, where we began the commentary, right? We are here. We are entering the later stage of a bear market. We haven't broken yet, but we're going to. So you want to be in staples, energy, healthcare, basic materials. Basic materials are still going to carry through. Why? Ukraine, Russia, inflation. Utilities have been ripping. They can move up higher. Shocking with the 10-year yield moving up higher as well. I wouldn't have imagined that, but it's a safety trade. And soon we'll be looking at the banks. Not yet. Not yet. We have yet to get to that stage. You are here. We are at the beginning of a bear market, entering the mid to, I'm not even say late stages, the mid stage of a bear market, and the economy is still deteriorating. You do not want to own finance. Transports are cyclicals. You do not want to be in the cyclicals. You do not want to be in industrials. Avoid. You're welcome. Yeah, Danny, hey, nat gas, yeah, ripping, amazing. It's going up higher. Yeah, the institutions that own Twitter, the second largest holder of Twitter stock, first you have Elon Musk, then you have Vanguard, then you have BlackRock. Vanguard and BlackRock in particular, they are buying up housing all across the South, tracts of housing, because they're making the decision that millennials don't want to own. Remember the phrase, by 2030, you'll own nothing and be happy? They want you to be renters. They want you to be serfs. So they don't want to give up Twitter. Twitter is a battlefield right now. Have no doubt there is going to be a war over this. They're going to try to tank Tesla stock. I admire Musk, but he really put his nose in a beehive on this one. I hope he wins. I can't stand these lizard people. God bless them, and it's going to be a war. It's going to be a war. Check the monthly chart on the VIX. Topping tails, January. The VIX looked pretty good last week. Let's bring it up. I see what you're saying. I do see what you're saying. You got it, Paul. This is an interesting chart. I like the way you're thinking here with the topping tails. We'll see how we close out the month. But I'll tell you, while I agree with your where I believe that you're going, and correct me if I'm wrong, Danny pointed this out. If we see a continuation move up higher on the VIX, and we rally up and through, and we close above on a monthly time frame, 38.94, you're probably looking at Armageddon in the stock market, because you're right. Your point is dead on accurate, that what the VIX is telling you right now is that there's a ton of resistance up at, let's call it the 40 mark. If we blast through 40, you've seen Armageddon. Things getting real fast. You got to be in cash, crypto, whatever. because it's not going to be a pretty picture for the markets. That being said, we want to keep an eye on the bottoming action that we have down here as well. So I get your thesis. I understand it. I appreciate it, respect it. Good point. Thanks for bringing it up. I'm running over here a little bit. Let's leave it off with BA. Oh, wait a minute. Hold on. Lewis, MOS. We'll do Lewis and we'll do Paul, BA. We'll leave it off with those. Okay. MOS first. Now, Mosaic should be doing tremendous. And correct me if I'm wrong. This is the fertilizer play, right, Lewis? It is doing. I mean, this is a monster. You have RSI in a monthly time frame at around 82.5. You're kissing the third standard deviation Bollinger Band. You're far extended from the base from which it broke out at. I couldn't buy it here. Maybe you could, actually. This looks like it has more room to run on a weekly time frame. If you do enter this trade, I would definitely use a trailing stop loss order. The minute I entered the trade, I would put in a trailing stop loss order, let the market take you out. That's how when I do momentum trades, I get out of a position. I just set my trailing stop. I let the market take me out. Where I land, and usually it works out for the best. So we're probably moving up higher. We are overbought a bit. We were more overbought. The froth has come off, setting the stage for a continuation move up higher. Weekly time frame, daily chart. Keep in mind the value, folks. Resistance above here. Click of a button, trend line, 35% discount code below, and we have resistance immediately above. I would not buy this stock until we broke out above this resistance level, or we pulled back to support. Create another alert here. Touch bounce, keep a little bit of sensitivity. And we're good to go. Let's check in with the seasonality. We're not at a great time of the year. The good thing is that this is not a historically favorable period of time. The however is it's performing favorably, and we're entering a period of time once we get through May, where in June, July, and August are typically very strong periods for Mosaic. So I'm bullish on it. Just be careful. It is overbought on a monthly time frame, extended far from its breakout point, where my ideal buy point would be. On a weekly time frame, if you're going to enter the trade, use a trailing stop loss order, 3-5%, whatever you decide. It's up to you. But if you're looking to initiate a trade, remember that daily chart. You got resistance immediately above. Wait for that alert to fire off before you get involved. Selling puts. I like it. Yeah, good. I'm good with that. And for those not familiar, what Lewis just said here was selling puts. He's not bearish on selling the puts. What he's doing is looking to sell the puts, generating cash flow. So it's technically a bullish trade. What Lewis is going to be is the counterparty to another person betting that Mosaic is going to go down by buying put options. They're going to get burned, but they don't know that yet. The probabilities are in Lewis's favor on the sale of the puts. I like the trade. I like it better than buying the stock outright because it gives you a buffer to be wrong. I like it. And you let that time decay work for you. I get this bear sweats when Bob talks about the market tank. Hey, Talon. I don't make it up. We're just using the charts. We're just using the data that's given to us, and we shoot straight from the hip. I don't have advertisers, right? I don't have to worry about my advertising pulling and saying, you know what, you're not playing the game right. I do business with TrendSpider. That's it. I have subscribers. They pay my bills. You guys pay my bills by watching me on video on YouTube. I care what you think. I don't care what anybody else thinks. So that's the value of not having advertisers on my platform. You notice you go to my website, I have 0 advertisers. I don't want them. Okay, let's leave it off with Boeing, BA. Let's clean this up here a bit. Monthly chart. I like it. I know that 190 is going to be stiff resistance, and that was the high of the month, near the high of the month for this month. So what I would do here, let me get all these drawings. I've reviewed this chart so many times. I got to get rid of all these drawings. Okay. Let's get rid of this one too. Well, you know what? Let's keep this one. I drew this a long time ago, not this one. Okay. So Boeing, obviously, since June of 2021, has gone into a consolidation range. The longer the consolidation, the greater the validation of any breakout. We recaptured this resistance level back here in January. Retest 1, retest 2, retest 3. You don't want to see any more than 3 retests on a breakout. So what I think is going to happen here is that we are going to break out at some point in time in the near future, and I would be a buyer. I like the setup here. I have to say that. But that's a monthly chart. I may get discouraged if I look at a weekly chart. I did get discouraged on a weekly chart. But we are putting in here a higher low. We're in a tight triangle formation on Boeing. We're looking for a breakout here. And I think this could be nibbled on. I'm not saying wait for the breakout. If you want to buy 100 shares, you want to buy 10 right now, go for it. I think it's a good setup. But where I want to get aggressive, come on, is on a breakout above this weekly resistance level. And I would also consider, I would put, if you're going to nibble here, use breakthrough, touch, bounce. And I would buy at support. And if it fails to hold that support level and you already built a position, stop out. It's going lower. Okay. That is Boeing. Let's take a quick peek at a daily chart. Not loving the daily chart. Probably going to pull back a little bit. No rush here. Let's say good night to people. Franklin, talk to you tomorrow, my friend. Yes, hit the like button, everyone. Please hit the like button. Thank you. And Everyone have an awesome night. Happy Easter to everyone. Enjoy the time with your family. Have a profitable trading week. Members, get ready for earnings week, and I'm looking forward to it. Be well.